Was it to stimulate or was it to stabilize?
Thanks, David. Really nice to be with you. I think it was more to stabilize than to stimulate. I think what you've seen right now is a clear emphasis from the Central Economic Work Conference statement on the need to stabilize growth, multiple discussions of the pressures facing the Chinese economy. And as you mentioned, as Stephen mentioned, some front loading of policy measures is likely to be accelerated at this point. One thing I would note is I think there'll be more emphasis on monetary easing out of this rather than fiscal policy easing. One reason for that is that if you've seen throughout the last year, year and a half especially, is that fiscal policy is becoming less and less effective in actually generating growth, simply because local governments and local government financing vehicles are so heavily indebted that there's a large pressure to use bond proceeds just to repay existing debt rather than funding new spending. So there's some possibility of a real acceleration in fiscal policy early in 2022 because the comparison to last year doesn't quite look the same. But over time, I think in order to stabilize the economy, you're going to need a stabilization in property sales, and you're also going to need a stabilization in credit growth. And both of those things will probably require monetary easing to gain momentum. And so we're really watching, the next MLF adjustment on the 15th, and the potential for the LPR to be adjusted on the 20th.
Well, it seems like if that is the route that they will pursue, it seems like they will need to do more. I mean, to your point, right? On the fiscal side, yeah, but on monetary, credit impulse is negative. A triple R cut has been widely priced in already for the first quarter of next year. Incrementally, what else do they need to do, to your point, on monetary policy then?
Right. I mean, transmission has been a problem throughout this year. So what we have seen is very deliberate efforts, and I think the market's kind of underestimated how much the PBOC has already done to reduce bank funding costs. What we haven't seen is those bank funding costs being passed on to end borrowers through a reduction in the LPR. And through overall corporate borrowing rates. If you look at short-term bill financing rates, for example, those rates are very low, and those indicate very weak private sector credit demand. So the bigger picture here is, yes, there is a case for the credit impulse to stabilize, but that probably will require more monetary easing. It probably won't occur until around the second quarter of next year. Sometime in the sort of April-May range is probably the earliest this can take place. But if you're controlling lending to the property developers still with the loan concentration caps in place, and you're controlling lending to local governments in general to try to control their debt, it is very difficult to get overall credit growth higher without actually stimulating private sector credit demand. And that's really what's missing at this point. It's one of the things that's missing at this point in the case for a more sustainable recovery.
Logan, just to take also that part to the equation, obviously we mentioned property, so let's talk about Evergrande and the general property slowdown there. So we understand why they're trying and ring fence it. We also understand why we have those three red lines. I guess the other side to the question there, I would imagine that doesn't get asked as much is Beijing removing the economic incentive for developers to help develop the property market?
Right. I mean, I think this is one problem that we haven't quite seen a lot of detail on yet, and I'd be interested in how they're going to counteract this process, which is that local governments are in their own bind, because Beijing is saying that it's very important that these houses be completed, that all the buyers who had bought pre-construction, and this, pre-sales is a massive imbalance in the market. It's 15.7 trillion yuan over the last 12 months. So this, if you see a decline in sales by 20% or so, it's really hard to offset that with policy. But what local governments are doing, if they're facing pressure to build these units, they're trying to put the pressure on developers as well by tightening escrow requirements. We're hearing numerous reports of that sort of tightening around the country, and that makes it more difficult to complete projects. So I wouldn't be surprised if there's some attempt to try to stabilize financial conditions for developers. There is a reasonable chance that with the Politburo statement expressing more support for reasonable demand in the housing market, that could offset some of financial developers' risk aversion. But that's the hope.
Well, can we at least say the worst is behind us? It's going to take some while to heal.
I think the worst of the policy tightening is definitely behind us, and we've definitely turned a corner in that respect. I'm not sure we can say the worst of the financial or economic fallout is behind us. And the transmission channel I'd be most concerned about is through local governments, because we've seen land sales decline by about 45% over the last 2 months, based on the 100 city data. That's going to put a lot of pressure on local government finances and on their ability to, service local government financing vehicle debt. And we've seen a lot of tension in the onshore credit market, in the offshore credit markets. We haven't seen as much tension in the onshore credit markets. And the channel of contagion I think Beijing would be most concerned about, that everyone would be concerned about, is the potential for LGFV debt starting to default in larger numbers.